Keon, a senior research analyst with Thomson Reuters Lipper, and I'm here to speak to you about the fund flows activity for the week ended Wednesday, October 4th. We'll start the report by taking a quick look at the market activity for the week. Both the Dow Jones Industrial Average and the S&P 500 Index were up every day of the fund flows trading week. The indices finished the week up 1.4% and 1.2% respectively. The investor optimism seems to be stemming from the Trump administration's announcement that they're going to take a shot at overhauling the tax code next. The two big items that seem to spur this confidence were the announcement that the corporate tax rate will be reduced by 15%, from 35% to 20%, and there will be easing of the tax burdens on U.S. corporations repatriating their overseas profits back to the U.S. There's hope that these two items and just the overhaul of the tax code in general will help to spur the 3+% growth that the U.S. economy has been looking for ever since the global financial crisis in 2008. Let's turn our attention back now to the fund flows activity that we saw this week. We'll start by taking a look at our fund macro groups. Equity mutual funds had outflows of $6.4 billion on the week. Taxable bond funds took in $2.3 billion in net new money. Muni bond funds saw about $212 million leave their coffers. And lastly, money market funds had big outflows on the week, approximately $3.9 billion. Now we'll take a closer look at each of the fund macro groups, starting off with our equity funds. Just a repeat of the mutual fund data we just had, the $6.4 billion in net outflows for the week was their 15th straight weekly outflow and brings their net outflow to approximately $78 billion for the year to date. This week we saw net outflows from both domestic equity funds and non-domestic equity funds, about $5.4 billion and $1 billion respectively. For the year to date, this brings domestic equity funds have seen net outflows of roughly $110 billion, while non-domestic has taken in about $31 billion in net new money. In the weekly activity, the largest outflows belong to the International Large Cap Growth Funds Group and the Domestic Large Cap Growth Funds Group, which saw about $3 billion and $1.2 billion leave respectively. Let's focus on equity ETFs now. Conversely, this group experienced net inflows last week, took in about $5.3 billion in net new money, bringing their year-to-date net inflow to roughly $190 billion. This number is on pace to shatter the previous annual high of $155 billion, which was set in 2014. The largest contributors last week was the iShares Core S&P 500 ETF, which took in $1 billion. The Industrial Select Sector SPDR product took in about $969 million. And lastly, on the other side of the ledger, we see the SPDR S&P 500 product had outflows about $1.9 billion. Let's turn our attention now to the taxable bond fund group, starting off with mutual funds. We saw net inflows for this group as well last week, as they took in about $2.3 billion. The major contributors last week was the Core Plus Bond Funds Group, as well as the Core Bond Funds Group, which had about $784 million and $550 million in net inflows respectively. For the year to date, taxable bond funds are up about $152 billion, with the major contributors being the core bond funds category as well as the multi-sector income funds category, with net inflows of $57 billion and $35 billion respectively. Let's move on to the ETF side for taxable bond funds. Saw net inflows here again last week, $1.7 billion, their 13th straight week of net inflows for the group, bringing their year-to-date total to about $90 billion. Major contributors last week were the iShares iBoxx investment grade corporate product, as well as the iShares iBoxx high yield product, which had net inflows of roughly $490 and $400 million respectively. On the other side of the ledger, you see the iShares 20+ year treasury product had net outflows of about $515 million. Moving on to our muni bond fund category now. Net inflows for this group, net outflows for this group, kind of reversing the trend. We've seen a lot of, they've had quite a streak of net inflows as of late, but we saw $212 million leave their coffers last week. The major culprits here were the general muni category, as well as the California muni debt category, which had net outflows of $63 million and $44 million respectively. Our last group to take a look at for the week is money market funds. Big outflows here this week, as mentioned previously. They had about $3.9 billion leave their coffers. The major contributors to that were the institutional U.S. government money market category, as well as the institutional money market fund peer group, which saw about $3.8 billion and $1 billion leave respectively. Well, that does it for this week's report. If you'd like to take a closer look at the data for yourself, please join us at our website, which is www.lipperusfundflows.com. And please join us here again next week, where another one of our analysts will be speaking about that week's fund flows activity.